Hello, good morning. You're watching Market Cafe on ET Now. I'm Vinny Motiwala with me, Shreyanti Singh. Shreyanti, very good morning to you. Happy Friday. But I don't think it's going to be that much of a happy Friday. Yesterday, the Nifty surely did see a sharp spike up and trade in the second of the trading session. But global markets quite subdued what they're looking like right now.
Absolutely, but I think there was no dearth of excitement, right? Despite that muted move coming in. But like when you look at the futures, you're looking at a subdued move coming in when you're looking at futures. But then when you look at the day that was gone by, when you look at the day for the three major averages, what you're looking at is that there was no shortage of excitement. Like I mentioned, the Dow surpassed that 40,000 key psychological level as well. And when you look at the broad S&P 500, that also is retreating about 0.2% thereabout. That compares with about a 0.1% retreat coming in for the Dow after that exciting crossing beyond the 40,000 level. Now, when you look at the nasdaq composite, then you're looking at a little bit of a subdued move coming in there as well, because the nasdaq was also down about 0.3% after reaching an all-time high. And despite the weekend to Thursday's trading session, the indexes are still on track to end the week with gains. So when you're looking at the nasdaq, that is leading the way on a weekly level with a 2.2% advance as of now, and followed by the S&P 500's 1.4%. And the Dow is also tracking to close the week about 0.9% higher as well. Now, this week's accent has also helped propel prices in terms like the three indexes into positive territory for the second quarter despite a tough start. So when you look at the S&P 500 as well as the nasdaq, both up more than 11% in 2024. The Dow as well has climbed more than 5% on the year. So good moves coming in terms of a weekly basis or a yearly basis for the three indexes. And there are no major financial reports as the earnings season is winding down. So that largely is the handover coming in. When you look at those, let's also take a look at the European markets as well. And Europe stocks closed lower as earnings dampened the rally a little bit following the softer than expected inflation data that was also on the radar for Europe. So when you look at the pan-European stock 600 index, you're looking at losses coming in to the tune of about 0.2%, and that largely is the handover coming in from Europe as well.
Okay, that's the handover from the global markets. Nothing bad in terms of that when you look at it, though ended in the red, but Dow managed to cross that 40,000 mark for the first time ever, so we're keeping an eye on that. Let's talk about crude oil, gold. What's that been doing in action? Now, when you're looking at Brent crude oil prices, yes, we're seeing them around the $83 per barrel mark, while WTI crude oil somewhere around the $79 per barrel mark. What we're keeping an eye out on is that seems like these oil prices have remained steady even in today morning trade. Not much of a jump up or a jump down. Holding on to some bit of a positive side, Brent crude oil as well as WTI crude oil, and maybe we could be seeing that Brent crude oil will be closing the week with a slight bit of a positiveness, mild positive uptick, given that a bit of a softer dollar, shrinking US inventories, as well as increased Chinese stimulus is something that is increasing the hope of a better demand for oil is what you're keeping an eye out on. Now, yes, that is something interesting we're watching out for, but Brent crude market, when you saw it, in the week, we're seeing some bit of a mixed signal coming in for this, given that there were demand forecasts for this was a bit of a different forecast that we were having, persistent economic uncertainty, which continues to weigh in terms of the Brent crude oil prices. But by the end of the week, seems like a mild bit of a positive we could see for Brent crude oil. Not much of a worry because EIA data also clearly indicated that the stockpiles are falling. So let's keep an eye out on that. And EIA data, overall the inventory data, that is what comes out, that's declined for the second consecutive week. So it's going to be key to watch out for in terms of the crude oil prices going forward as well. But yes, keeping an eye out on the week, you may see it closing with a slight bit of a positive. Other than that, let's look at the gold prices and where gold is headed, because gold today, mild bit of a subduedness is what we're seeing as of now in morning trade, down 0.2%. Watching out for the Fed's decision is going to be key, right? Where the inflation is headed, what are the rate cuts that one could expect in terms of June. Gold prices at 2,380 rupees, keeping an eye out on that. Easing because dollar is also seeing a bit of a subduedness, not much, but yes, something that you should watch out for is gold prices going forward. So yes, Shreyanshi, that's what we're watching out for in terms of Brent crude oil as well as gold. Not much of a issue as of now, not much of a spike up or a fall down. Subdued in trade today.
Absolutely. And speaking of what we're watching out for, right? So there's a lot on our list. When you look at factors from India, of course, you do have the forex reserves data coming in, and in terms of global cues from the US, you do have Fed's balance sheet as well as Baker Hughes oil rig count data. Now from the Eurozone, there's CPI data that you should keep an eye on, and from China, there's retail sales as well as industrial production data as well. Now, in terms of the Q4 earnings calendar, of course, in terms of Nifty companies reporting, you do have JSW Steel reporting its numbers, strong volume growth, and the commentary regarding the high iron ore as well as coking coal prices will remain in focus for JSW Steel. And in terms of corporate action then, the RBI will be meeting ARCs as well as income distribution by Nexus Select Trust that will remain in focus, and Inox Wind bonus issue in the ratio of 3:1. That also is something that you should keep an eye on. And Inox Wind will remain in focus. And speaking of counters that will remain in focus, you do have advanced enzymes that will remain in focus on account of that interim dividend, since it's the last day to buy for interim dividend. Now, it's the last day to buy Craftsman Automation as well for final dividend. So keep an eye on that one as well. And in terms of primary market action then, it's the last day to subscribe to Go Digit IPO. So that one will be in the spotlight, and the lock-in period is also ending for Archean Chemical, and that one will be in focus as well. Now, in terms of key events that you should keep an eye on, PM Modi will be addressing a rally in Mumbai Shivaji Park, and then of course there's the opposition that will be holding the rally at Mumbai's BKC as well. So those two rallies will remain in the spotlight, and we'll be watching out for all the updates, and we'll be giving you all the updates on the channel. And of course, in terms of commentary then, you also globally you do have FOMC members Waller and Bostic that are scheduled to speak. So those speeches will also remain in the spotlight, Winnie.
Absolutely, those speeches will remain in the spotlight, but we did have some of the commentary that came in from some of the Fed members even overnight, and let me talk about some of them. Now, we have Fed's Mesters as well as William talking about it. So, firstly, market participants are continuing to eye on the Federal Reserve commentary closely, and that's what the Cleveland president Loretta Mester said, that what they're holding out in terms of rates are steady at the current levels, and she believes that the move will help central bank bring inflation back to that 2% target. Furthermore, she's adding that she expects progress on inflation over time, but at a slower pace versus last year. However, Mester reiterates that risk inflation have risen and risk to weaker growth and hiring have diminished, which means in a strong economy, the Fed has the space to look at more evidence for inflation in terms of moving back to the target before actually cutting the rate. So let's wait and watch for that. Other than that, New York's Federal Reserve President John Williams also welcomed the arrival of a softer inflation print in April, but said that the positive news is not enough to call for rate cuts anytime soon. He believes that the restrictive policy stance is something in a good place, and that he doesn't see any indicators to alter the stance as of now. This is what the commentary, Shreyanshi, we're seeing coming in time and again, that, they're saying wait and watch before we actually jump into another rate cut, and that's the commentary coming in from both of them as well.
Alright, then there you have it. So that's the commentary coming in from Fed officials. But let's shift focus then, and the IMF criticized the Biden administration's decision to aggressively raise tariffs on some Chinese goods, underscoring potential risks to global growth and trade if tensions between the two economies worsen. IMF largely believes that US would be better served by maintaining open trade policies vital to its economic performance. Research also shows that fragmentation in the global economy can fuel potential losses for global GDP of as much as 7% in a severe fragmentation equivalent to the combined output of the German and Japanese economies.
Okay, and moving on, US retail Walmart surges to an all-time high after the company topped quarterly earnings and revenue expectations. Performance largely was fueled by significant gains made in the e-commerce segment of the company. The retail giant also expects to hit the high end or mildly top its previous full-year guidance, and the net income in the quarter gone by jumped by $5 billion versus $1.6 billion at the same time last year. Revenues too jumped by 6% for the company, keeping an eye out on Walmart.
And the European Union has slapped Facebook parent Meta with a major investigation on alleged breaches of the blog's child safety rules. The European Commission said that it is investigating whether the social media giants Facebook and Instagram platforms may stimulate behavioral addictions in children as well as create so-called rabbit hole effects. Also adding that it is concerned about age verifications on the platforms as well as privacy risks linked to the company's recommendation on algorithms.
Moving on, and in a major licensing deal for artificial intelligence firm OpenAI, the organization says that it has inked a multifaceted deal with the web platform Reddit. Now, the move will allow OpenAI to access Reddit's data, application programming interface, and train its AI models on Reddit content. Additionally, the deal also makes OpenAI Reddit's advertising partner, and post the announcement, Reddit's shares actually surged as much as 11% in trade.
Alright then, that's all about the global updates that we had for you this morning. But let's move on then to something closer to home. In Mumbai, the maximum city goes to vote on May 20th in the fifth phase of the ongoing elections. But what are the challenges for candidates and the voters? ET now spoke with Mumbaikars themselves to know what they want. Take a look.
Everything about Mumbai is so special.
I think that Bombay can hold space for a lot of diversity, and that is like no other city in the country.
In the ever-changing Mumbai, which changes day by day, the sea remains constant here. So.
Originally home to the fisher folk or the Koli community, the city of dreams and its ambitions have evolved over decades. By the turn of the 19th century, it was thriving as India's largest cotton market. It also was home to India's largest textile mills, over 80 of them, and over 2 lakh mill workers. But by the turn of the 20th century, Mumbai transformed from an industrial capital to a commercial, money-minting entertainment capital of the country. As Mumbai goes into the last phase of elections on the 20th of May, let's find out what Mumbaikars want and have on their to-do list for the next decade.
City is very dirty, especially footpaths. All the hawkers should go away. They should be provided some place, but not on the footpath.
हम लोग को भी वही है, ट्रेन का ट्रैवलिंग करके हम लोग आते हैं, बट बहुत गर्दी रहते हैं, बहुत लटक के आते हैं, बहुत फैसिलिटीज और फैसिलिटीज होना चाहिए ट्रेन का ट्रैवलिंग का.
I think Mumbai is perfect, I guess.
Biggest issue currently, the way I see it, is access to good health. Okay, whether it is in terms of good places for people to go out. Education is a big thing, especially for the lower middle class. Getting access to good education, that is something that you need to focus on. Infrastructure in the outlying areas is something that the government needs to clearly focus on. Housing, especially, the entire land bank which is around Mahol or even Trans Harbour should be looked at. You spread out the city further and get good infrastructure to get people to commute at very less amount of time. The commuting time should be very low. And if we are able to achieve that, the glory of Mumbai will come back. The current discourse is more about issues which are not related to the city and more emotional issues. I think so. I would have been happier to see more parliamentarians, those who are hopeful to be parliamentarians, talking about what are the key aspects that they are going to work in the next 5 years, which doesn't come out across as the way it needs to be.
Infrastructure. If the government focuses on fantastic infrastructure, we are adding and extending it not only to the city and suburbs, but new cities across the harbour, across the periphery of the Mumbai metropolitan region. That is number one. Number two, looking at sufficiently in terms of environment in every aspect of work, whether it is construction, whether it is any other aspects of it, making more gardens, working more other availability of areas which are green and open, afforestation that we really need to do it. All the rest of the things the city will make. We will make the buildings for the purposes of development. We will do the schools, college, and hospitals to be done. But for the non-affordable, a large amount of other infrastructure, whether it is education, whether it is health and other things, which the corporation is already doing. But what it needs, because the population has increased, we need to do much more about it. So all this and more we can do. And second, there is no shortage of money for the first time in the history of this country.
Absolutely. Mumbaikars are getting ready for the E-Day. So Mumbaikars, go get voting. 20th May is when you should start voting for the Lok Sabha elections. Get ready for that. But on that note, we are going to slip into a short break. Don't go anywhere. We'll be back with more updates after the break. Welcome back. You're watching Market Cafe on ET now. Let's move on and look at what the Asian markets are doing this morning and how they've opened in trade. Nikkei, a bit of a subduedness. It's down almost 0.4% in trade. Most of them are trading a slight bit lower as well. We do have economic data points that are coming in from China. So yes, everyone's keeping an eye out on that. But yes, as of now, Nikkei opened up a bit subdued. Shanghai managing to hold on to some bit of a gain of 1/10 to 2/10% in a trade. Other than that, let's look at Hang Seng also. What is that doing? And Hang Seng also seems like it's managing to hold on to some bit of that positiveness that we're seeing. Hang Seng is managing to hold on to 0.7% of a gain in trade. Now, yes, we did have that China data which I was talking about that has come in. One of the data points is in terms of the home prices. Home prices have dropped faster than in the month of March. That's the latest update coming in versus the estimates of the agencies. So we should be keeping an eye out on this data point. As of now, Hang Seng as well as Shanghai trading on a bit of a positive side. Let's look at what the Korean market Kospi is doing, and Kospi is seeing a bit of a subduedness today in trade. So yes, we are going to be watching out for Kospi today, a bit of a subduedness that we are seeing on that front. What is ASX 200 doing? That's the Australian market that has also opened up in trade, and ASX 200 is also managing to see only a slight bit of a subduedness there. So yes, Kospi, Nikkei as well as ASX 200 trading in the red, while Hang Seng and Shanghai are managing to hold on to some bit of a gain. Indian markets, a subduedness or an implied open, Nifty implied open as of now is at around 0.1%, indicating slight bit of a positive start to a muted start even for the Indian markets. Keep an eye out on that.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more updates then. In Reliance Jio, Bharti Airtel and Vodafone Idea have deposited a total of about 4,500 crore as earnest money to bid for fresh telecom spectrum. Remember, the auctions will start on the 6th of June. What does the latest development mean for the telecom industry then? Somit is standing by with the answer.
Well, the 2024 telecom spectrum auction will be starting on June 6th, and currently Department of Telecommunication has released the names of the pre-qualified bidders and how much money they have deposited, which is the earnest money deposit submitted by these bidders. Now, what is this earnest money deposit? It shows the intents of telecom companies of how much they want to spend in this telecom spectrum. Now, generally, EMD requirements are very across different bands, which is the spectrum bands, and across different circles. But on an average, if you see, if a telecom company deposits say certain amount of money, they can spend nearly 8 to 15 times of that money which they have deposited. So here's a look at what the telecom companies have deposited. Firstly, if you see Reliance Jio, they have deposited close to 3,000 crore rupees, which means that they can spend nearly 35,000 crore rupees in this telecom spectrum auction. Bharti Airtel has made a deposit of close to 1,050 odd crore rupees, which means that they can spend close to 12,000 crore rupees in this spectrum auction, while Vodafone Idea has deposited just 300 crore rupees, which means that they intend to spend around 3,500 crore rupees in this 2024 spectrum auction. Now, what does this mean for Reliance Jio? If you see, the EMD the deposit that they have done is higher than what the street was expecting, given the fact that none of its spectrum is due for renewal, and the company has sufficient spectrum in across all the circles in India. Now, this means that Jio might get aggressive aggressive and might increase its coverage by adding more spectrum in its coverage, and but it can also choose to not to bid in the spectrum. But given the fact that it has deposited 3,000 crore rupees, it intends to get aggressive even in this spectrum auction. For Bharti Airtel, if you see, nearly 42 megahertz of spectrum of Bharti Airtel was expiring in the 900 and 1800 megahertz band, and it will be bidding for these spectrum given the fact that it has deposited an EMD of close to 1050 odd rupees. But given the fact that the EMD deposit is a bit on the higher side, analysts are expecting that it can further bid for additional 800 and 900 megahertz spectrum in certain circles as well. Also, analysts are expecting, given the fact that Jio's EMD is higher, the prices could also move up given the fact that Jio might also bid for additional spectrum. And lastly, for Vodafone Idea, if you see, it has 12 megahertz of spectrum expiring in two circles in the 900 and the 1800 megahertz band, and it will be definitely bidding for this. Other than that, analysts are not expecting any additional bids to come in from Vodafone Idea in the 2024 telecom spectrum auction.
Okay, Soumit, thank you so much for that update there. But let's keep it with Vodafone Idea, and we have the report card for Vodafone Idea that's come in. Now, in the fourth quarter, what we saw for Vodafone Idea, that the losses of the company, slight bit of a widening and increase in terms of the losses versus last quarter. 7,675 crores is the losses for Q4 versus last quarter was 6,986 crores. Other than that, what we're seeing, the revenues of the company, a bit of a subduedness that we're seeing for the revenue of the company. So let's keep an eye out on that as well. Other than that, you know what we should also watch out for in terms of how the EBIT performance has been, EBITDA performance. That's come in at a slight bit of a decline in terms of the EBITDA, 0.3%, while ARPU is at 146 rupees versus 145 rupees last quarter. Overall, the 4G subscriber base, a slight bit of a mild uptick on that front, 126 million versus 125 million approximately. And overall, Vodafone Idea, the equity fundraise, that is something that will enable them to kickstart the investment cycle. So yes, that's what we're watching out for. The capex is expected at around 50,000 to 55,000 crores over the next 3 years. Interesting to watch out for that. We've, capex will be more towards that 5G launch in the key cities is what the word is coming in. So yes, it's interesting that we'll be watching out for all these data points as of now and keeping an eye out on Vodafone Idea in trade. Losses, slight bit of a widening, but commentary is also something that we're watching out for.
Absolutely, and in terms of what we're watching out for, we're also watching out for the reaction coming in on Mahindra and Mahindra today in today's trading session then, because they announced a strong set of results for Q4. Barring revenue, which is in line, net income, EBITDA and margins have all surpassed analyst expectations. And when you look at the consolidated revenue for Q4 then, that grew about 9% on a year-on-year basis. When you look at the profit after tax figure, increased 4.5% as well. And the automaker also notched that #1 place in the tractor segment in financial year 24. And not just the tractor segment, the auto and farm segments have been doing well, and this is something that they've commented about as well. In fact, Group CEO and MD Anish Shah also shared how the company is still working on hybrid cars and the relevant technology as well. Listen into what he had to say as well.
Governments around the world largely have stopped providing any incentives for hybrids for the last 20 years. So the question is, is an incentive really required? Now, from a consumer demand standpoint, if that becomes a bigger factor, we will be ready for that. So we view hybrid as an extension of ICE. It's a separate, slightly different powertrain. And to the extent that that's required, we'll be ready for that. If there are significant changes in hybrid technology that cause it to be much more like an EV, then that's something we will move into much faster. So at this point in time, we feel good about the focus on EV. We are ready for hybrids. We are looking at hybrid technologies closely.
Material cost is a function of many things. Of course, commodity price is one of them. It's also a function of model mix. So it's very hard to just draw a conclusion looking at two numbers, because sometimes you're selling high horsepower tractors, then you will have a higher weightage of material cost, because this is an average of all the models. But material commodity prices were benign in Q4, especially for tractors which doesn't have specific base metals like aluminium and copper, which had gone up. The rubber has seen some kind of spike, but that's not affected quarter four. We may see some effect of that now in quarter one or quarter two.
All right, then let's also take a look at what the brokerages had to say. And when you look at the word coming in from Jefferies, they've upgraded the counter to buy from hold. And in terms of what they're saying, of course, they've hiked the target to 2,910 from 1,615. And what they're talking about is the expansion of the SUV portfolio and capacity. That's what they've highlighted. When you look at their EPS targets as well, they've upgraded that as well for financial year 25 to 26 by 16 to 21%. Is what they're talking about. Now, in terms of valuations, they're saying that valuations are 20% below blended peer average. And that is something that Jefferies has highlighted about M&M. When you take a look at what CLSA had to say as well, they're going ahead and downgrading the counter on the other hand to sell from outperform. And they're still hiking the target to 2,312 from 2,115. In terms of growth, they're talking about how they're expecting 10% growth in the tractor segment for financial year 25. Now, this, of course, is a segment that has already done well in terms of the commentary that's come in from the management as well, has been very positive about the farm segment. And the stock is fairly priced. This is something that CLSA is talking about. And especially after the recent rally, they're saying that the stock is fairly priced. So that's largely the word coming in from CLSA as well. This is what the brokerages had to say about M&M then.
Okay, that's the word on from the brokerages this morning on M&M. But let's move on and talk about Ola. Now, CFO of Ola Cab's parent firm ANI Technologies has stepped down 7 months after taking charge. Before joining Ola, Karthik Gupta worked as the Vice President and Regional CFO of the Asia Pacific, Middle East and Africa of Procter & Gamble for nearly 17 years. Now, Ola Group has confirmed that the exit, saying that the move is a part of an ongoing restructuring. ET Now Sumit Chaturvedi is joining in with us to give us more updates on what's happening on this front. Sumit, what's the latest update in terms of this resignation and the step down that we have from the CFO of Ola?
In a setback for Ola Cabs, its Chief Financial Officer Karthik Gupta has quit nearly 7 months after taking charge at the company. The parent company is ANI Technologies. This also comes at the heels of CEO Hemant Bakshi quitting after 4 months into the role. So this is clearly 2 top-level exits happening at a time when Ola Electric, which is sister concern of Ola Cab, is looking at IPO, and Ola Cab is also in discussions with the bankers for IPO as well. Ola Cab has already announced, Ola Group in fact has already announced it will reduce its 10% of workforce to save costs. It's also coming at a time startup sector is in very competitive stages. Raising of fund is also not an easy target. Karthik Gupta, before joining Ola Group, was in Procter & Gamble and he worked there for 17 years. But this one is coming at a time when clearly it was not expected at all.
All right, thanks Sumit for that roundup coming in. But it's time for a quick break. When we come back, we'll take a look at some more stock-specific news.
Welcome back. You're watching Market Cafe on ET Now. Now it's time to talk about the Indian markets, where they are headed. And moving on, the Nifty has seen a significant volatility in the recent times, with the Indian VIX surging as high as 55% this month, so far led by a lot of global cues, general elections. Now, what's in store for the Nifty for the rest of the month? Will this volatility actually continue, or will the bulls take charge ahead of elections outcome? Ansh is joining in with us to give us more of those insights and details on ET Now Insights. Ansh, take it away. What should we be expecting now?
Right, so let's start with this month's chart for Nifty actually. Firstly, Nifty touched record high on that 3rd May. And then after that, we saw a steep fall of around 4.2% within a span of 6 to 7 sessions. Then we saw it making a bottom on that 17th May. And after that, we saw a good recovery of 2.6% within a span of 3 to 4 sessions. The index has also closed about 20 and 50 DMA, which is a very positive sign. Well, this indicates that there are high chances that Nifty has reversed and momentum shall continue on upside. Let's also have a quick view on an intraday basis chart as well. So initially, Nifty fell by around 1.5% to around that 100 DMA, where it took good support and bounced by around 1.6%, which is almost 350 points of day's low in just that one last hour of the trade. And this was the biggest recovery seen in at least 18 sessions. This was mainly led by Reliance Industry and HDFC Bank. Let's also have a look over Nifty bank chart as well. So the index made a similar pattern actually. Initially it fell and gave a strong recovery of around 1.3% of day's low, and this was mainly led by HDFC Bank. Let's also talk about FII action as well. In the previous session, FII covered around 7,600 long and they added around 6,500 short. So net to net, we are seeing a reduction of around 14,200 contract on downside, due to which the total long has slipped lower from 27.6% directly to 26.2%. With this, the total long has touched 74 session low as well. The total short has crossed its 4 lakh contract for the first time in 8 years, which is a very pessimism sign. So in short, Nifty gave a good recovery. Even Nifty Bank is showing good recovery, but FII remain bearish in the market.
All right, thanks Ansh for that roundup coming in on the Nifty. But with that, also take us through the futures and options roundup then.
Right, so let's have a daily chart of the Nifty. So as you can see in the previous session, yes, Nifty gave a good recovery from that 100 DMA, which is around 22,000 to 22,050 level, and it closed about 20 and 50 DMA. But if we see on index option, we are seeing good call buying happening at 22,500 strike, indicating option traders expecting Nifty to go above this level and close there. Whereas on downside, we are seeing good put writing happening at 22,300. So if we see a fall in today's session, this is the level which could act as a cushion to the falling prices, and we may see some good recovery around from this level. Moving on to Nifty Bank. In the previous session, Nifty Bank gave a good recovery from that low, and if you can see that Nifty Bank has been hovering around that upward sloping channel, which is a very positive sign. Whereas on option front, we are seeing good call buying happening at the psychological level of 48,500, indicating traders expecting Nifty Bank to go above this level and to close around that level only. Also, if we see the top movers of the market, then Reliance actually closed around its crucial level of 2,845, which is a bit of a bearish sign. Stock needs to go above that decisively to give a good bullish stance in the market. Also, if we see HDFC Bank, it has been consolidating within a range of around that 1480 to 1420 to 1425 index. The stock also needs to go above this or below this to have a clear picture of its view in the market.
Okay, Ansh, thank you so much for that update coming in on that front. But we did have a lot of numbers that were reported overnight. And let's talk about some of the good set of numbers that came in. Now, when you're talking about the good set of numbers, we have Endurance Tech, above estimates numbers in terms of overall the consolidated EBITDA that came in at 390 crores, which is 20% above what the street was expecting, much better than that. Even in terms of the gross margin, that was better than the estimates, and that was in India as well as the Europe basis. That was much better than what the street was expecting. Consolidated EBITDA, when you look at it in terms of a percentage form, the EBITDA margin 14%, which was also quite good and good and above the estimates for what one was watching out for. Standalone revenue was quite good in terms of a performance. They saw a ramp up in terms of the new orders. They're keeping an eye out on that. And other than that, 7% growth in terms of the QOQ European business. EBITDA margin was driven by better than estimated in terms of gross margins, which was supported by the improved product mix as well as the price adjustment. So Endurance Tech expecting to, be on the positive side, at least today, much better than what the street was anticipating. Let's move on to the next one, which reported a good set of numbers, was Restaurant Brand Asia. In terms of the QSR segment that one is watching out for, Restaurant Brand Asia also reported a good set of numbers. Q4 has been strong overall for when you look at it in terms of the QSR players. In terms of overall, the SSSG growth was also quite on the positive side. So keeping an eye out on that, as well as in terms of the numbers when you look at it. Revenue EBITDA was ahead of the consensus. Margins was much better. Even Indonesia business for the first time in, since the last couple of quarters has reported a positive EBITDA. Margins were also bit of a subduedness in terms of margins versus what we were expecting, is only because there was higher marketing spends. But other than that, all in all, a good set of numbers that has come in from the company. But which are the other stocks that are buzzing in trade today? We have Jinay joining in with us. Jinay, very good morning. What are the stocks that one should keep on their radar this morning.
Yes, so right. We have Keynes Technologies on the back of the results. The company came up with a very strong set of numbers. The net profit grew around 97%, which stood at 81 crores versus 41 crores year-on-year basis. The revenue also stood up around 75%, which came in at 637 crores versus 365 crores same period last year. If we talk about operating performance, the EBITDA was also up around 61%, and the EBITDA margins also saw a bit of contraction, which came in at 15% versus 16.2%. Moving on, Sansera Engineering, again a company with a good set of numbers. The revenue was up about 21%, and the net profit grew around 31%. On the flip side, Avalon Technologies came up with a poor set of numbers. The revenue declined around 20%. The PAT was down around 69%, and if we talk about EBITDA, then it was down around 60%, with the margins contraction, which came in at 8% versus 15% year-on-year basis. Moving on other news, GE Power India will be in focus as the company has received a purchase order from Torrent Power worth around 15.6 crores. Dixon Technologies, a stock to keep your eye on, as the company has entered an MOU with Pure India for manufacturing for the range of consumer appliances products. Vedanta will be in focus as the company has approved a fundraising plan of around 8,500 crores via equity or debt instruments. GMR Infra, the company has reported the monthly data for the April PAX data, and the PAX traffic crossed 120.8 million, which was highest ever PAX traffic the company reported, which was up 20% year-on-year basis. And lastly, keep your eyes on PB Fintech as the company has received intimation from Yashish Daya, the CEO and chairman of the company. He will be selling about 54 lakhs equity shares, and Alok Bansal, he is the vice chairman and whole-time director of the company, looking to sell about 29.7 lakh shares via bulk and block deals.
Alright, thanks Tinay for that roundup. There you have it. Those are the stocks that you should be keeping an eye on. But with that, we're completely timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Vinny Motiwala, as well as the entire team that put this show together. Thank you so much for tuning in. But you don't go anywhere, because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.